Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, Index Research Specialist with Nasdaq Investment Intelligence, to discuss monthly trends in the Nasdaq indexes as investors come to terms with higher rates for longer. Sanjana, it's great to see you as always. Welcome back to Trade Talks, and give us a brief recap of the activity that you saw in February and where investor sentiment sits right now.
Sure, Jill. Thanks for having me back. So very quickly, a quick recap of market activity for the month of February. We saw stocks sell off in February after the Federal Reserve's preferred inflation gauge came in stronger than expected, sparking worries that the Fed will keep rates higher for longer, as you mentioned, to quell inflation. Investors had welcomed a broad rally in January after a challenging 2022. The rally does appear to have been short-lived, however, as investors are now factoring additional pressures on inflation and a strong labor market.
And let's take a look at your first slide here featuring the Nasdaq indexes and Nasdaq global indexes.
Sure. So as you can see in the first slide here, we have captured the performance of the Nasdaq featured indexes and the Nasdaq global indexes. As you can see, the tech-heavy Nasdaq 100 registered a decline in February, losing 0.5% after starting the year on a strong note. And out of the 100 indexes that we track, 23 out of the total 100 indexes finished in positive territory with an average return of 1.4%. And within the Nasdaq featured index lineup, we have the Nasdaq 100 technology sector, ticker NDXT, outperforming its peers with a gain of 1.7%. And what we wanted to sort of flag here is the Philex Gold and Silver Sector Index, ticker XAU, which had a loss of 14.8% for the month, making it the worst performing index. It does appear that the sector has reached its sort of natural peak after an impressive rally since November. And we saw the sector rally then when there was a slight pivot in the stance of the Federal Reserve and along with a slight weakening of the dollar. And what we also wanted to flag here, when you look at the Nasdaq global lineup, you see that they moved lower in February with an average loss of 3.2%, a strong reversal from the previous month, where all indexes registered positive returns. And here, what we wanted to highlight was we see emerging markets underperform the rest of the indexes. Emerging markets did start off the year on a strong note due to optimism over China reopening, but we see that it registered a pullback this month, mainly due to fears about US interest rates staying higher for longer, which has sort of weighed demand on riskier assets.
And what did you see with the Nasdaq Green Economy, Dividend, and Income indexes?
Sure. So in line with the overall trend, we see the Nasdaq Green Economy indexes ending February with an average loss of 2%, a strong reversal from the previous month, where the indexes posted an average gain of 7%. Here we see the worst performing index to be the Nasdaq OMX Win with an average loss of 2.9%, while the best performing was the Green Economy with an average gain of 0.3%. And what we wanted to sort of highlight here, the 2022 market turmoil affected parts of the green economy suite, largely due to the susceptibility of the sector to high interest rates. With rates likely to be higher for longer, there appears to be sort of near-term overhang over the suite of indexes. And if you look at the other suite of indexes, the dividend and income, you see that the February market's decline extended to this suite as well. It registered an average loss of 3.2%, whereas the suite registered an average gain of 5.8% last month. These indexes did have a strong run in 2022, and there remains optimism that they will offer relative safety in an uncertain macroeconomic environment.
All right. And then, of course, let's turn to our indexes that have some momentum and options built into it.
Sure. So in this slide here, we have highlighted the performance of the bullet shares indexes, which is our fixed income suite, the options, as well as the momentum indexes, the DOSI, right? So as you can see here, losses across the bullet shares indexes were relatively more muted when compared to other indexes with an average loss of 0.4%. This was a reversal from the previous month where the suite of indexes registered an average gain of 1.1%. Last year, we did see the fixed income market see historic losses. This year, the outlook appears to be more optimistic, while we do acknowledge that the road still appears bumpy. The performance for February was likely flat due to investor sentiment being cautious. Within our Dorsey Wright suite, again, we see two outperformers. We see the industrial tech leaders and the Dorsey Wright technology tech leaders, which gained 2.7% and 1.7% respectively. So not much in the way of returns for a factor approach.
All right. And finally, let's wrap up and take a look at some pockets of strength that you've identified in our thematic and tech indexes.
Sure. So the final slide here, as you can see, the thematic tech indexes finished largely in the red with an average loss of 2.1%. 21 out of the 27 indexes finished the month with losses. And this was a strong reversal from the previous month where all indexes finished the month with gains. And here what we wanted to highlight, the Nasdaq CTA Cybersecurity Index, ticker NQCYBR, was the relative outperformer, was posting gains of 2.2%. And as we have sort of been highlighting in our trade talks before, cyber has proven to be relatively resilient this year when compared to other areas of technology. And it has actually been somewhat immune to the large-scale layoffs that we have been hearing about in other areas of tech. And the semiconductor indexes, NQ, SSSE, and SOX have also held up relatively strongly this year after a challenging 2022. And it appears that investors are encouraged by data that the US economy continues to be robust even after a period of aggressive monetary tightening.
All right, Sanjana, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Sure, Jill. Thanks very much.